Good morning, sir.
Yes. Uh, Today is the last class. I think when is your exam? Students,
September 13th.
September,
30.
the auditing subject?
September 15th, sir.
Oh, yes, auditing subject is September 15th. You have only 1 week. That I already planned to have two, three lectures, but due to unfortunate situation, your sports festival and other program, I am unable to complete the 2, 3 lectures. Anyhow, I think almost all the subject matters I have completed. Today's section, in the last lecture we have discussed relating to the uh, auditor's report on the financial statement. That standard is 700. In that standard, we discussed the auditor's report on the financial statement and how they prepare the audit reports, what are the importance of the audit reports, elements of the audit reports, each and every elements we discussed. And also we discussed the sample audit report. Also we discussed in the sample audit report. We discussed the unmodified opinion, that is a clean opinion we discussed. If there is no shortcomings or no issues in the financial statement, auditors are satisfied on the financial statement. So auditors can give an unqualified opinion or unmodified opinion. That type of opinion already discussed in the auditing standard 700. That is a clean opinion, sometimes called clean opinion. Mukut adupata tibunanathan on the financial statement, auditors can consider to express an unmodified opinion. Konda mathyadamai unmodified opinion, right? So if the auditor is not in a position to give a clean opinion due to some circumstances, some reasons, auditors are unable to give clean opinion or unqualified opinion. So in this situation, auditor can modify the opinion. Just today's section is modification to the opinion in the independent auditor's report. So before we start this today's program, I have to give some plan. Right, today last lecture, 3 hours lecture. After discussing this section, we will list out. The areas we have completed up to now. Then what are the areas you have to give more weight? Those matters after completing this discussion, I think we will have a revision or list out the lessons we discussed and each and every lessons what we discussed, so we can that is useful for your exam purpose. Don't worry about the exam. Other thing that in addition to this written exam, I think you all submitted the assignments. No, your written assignment you have already submitted. Some of you are handed over. Some are loaded LMS. Is it correct?
Yes, sir.
Okay, fine. So, in addition to that that assignment, you will have to sit for the MCQ exam mostly tomorrow. That was very simple. These questions testing your knowledge on this subject. Basic things are there, so you can mark this MCQ, and immediately you can how many marks out of 35. So that is arranged tomorrow. Already our coordinator will conduct the exams and release the result. So it won't be any problem. This assignment marks and midterm exam. Midterm exam is a MCQ exam. Will be conduct tomorrow. That you can discuss with the coordinator and fix the time, right? So today, do you want to speak anything, students, before I start this lecture program? We are meeting after a long time. You can freely communicate. I hope that voice is okay, screen is okay. I want to check the screen and voice. Please give your response.
It's okay, sir.
Okay, fine. So we will first complete this session, last session, right, regarding the auditor's opinion, right? I think you can see this board also. One opinion, what we discuss is an unmodified opinion or unqualified opinion. I think you can see this. SLA US 700, when we discussed the auditor's report on the financial statement, independent auditor's report, we discussed all the elements, right? And one example is there, example of model audit report is there. In this report, you can find the audit opinion that is called unmodified opinion or unqualified opinion, sometimes called clear opinion. Most of the clients, auditing institutions needed this type of opinion. I want to ask from you on what situation this type of opinion can be expressed by the auditors. Before I start this, first we must understand unmodified opinion what is unmodified opinion. Then only we can come to modified opinion, right? So unmodified opinion තමයි கொண்ட மத்து, அதாவது நல்ல அபிப்பிராயம். Auditors best opinion is unmodified opinion. I am asking from you, in what situation or what circumstances auditors can express this type of opinion? You must answer. I hope you understood what we discussed in the last lecture program. Students, I'm expecting answer from you in what situation or what condition or what circumstances auditors can consider to express unmodified or unqualified opinion on the financial statement. මේක තමයි කොන්ද මතය. Please, last time I explained very clearly, and I read this model or example audit report also. In that audit report, you found the unqualified audit opinion. So I will read this before I read this opinion paragraph. I am asking from you in on what situation auditors can express unmodified or unqualified opinion. Unqualified means there is no qualification. Qualification means mune pali. Qualification means adupat. But here we are discussing unqualified opinion. Adupata mokutne. Auditors are satisfied everything. Only can give the unmodified opinion. Right? So in this opinion paragraph, I read this opinion paragraph, then you can answer this last time model example is there, that opinion paragraph, right? Opinion paragraph. In that opinion paragraph, right? Application introductory paragraph. Each and every elements I explained. Bia speaks about unmodified opinion. Illustrations given. Uh, in this report, there's a paragraph. In our opinion, this opinion element at that there are a lot of elements now. Title, management responsibilities, auditors responsibilities, opinion. Lot of elements are there now. That in that opinion paragraph, Matthew paragraph, auditors can simply state that, in our opinion, this financial statement present fairly in all material respect, within bracket, give a true and fair view of financial position of ABC company as of December 31st, its financial performance and its cash flow for the year then ended in accordance with the Sri Lanka accounting standard. So when the financial statements are showing true and fair view of finances, in other words, financial statement fairly presented. Fairly presented. Fair means what? No overstatement, no understatement, no omissions of the transactions, right? That if the auditing institution comply with the all accounting standard in preparation of financial statement, right? So whether proper books of accounts have been kept, right? So there is no misstatement, there is no scope limitation. In this situation, auditor can consider, gives an unqualified opinion. It's a best opinion. So simply say, you can list out when the unqualified opinion may be expressed on financial statement. Financial statement means financial position, financial performance, cash flow statement, note to the balance sheet, or everything, right? Equity statement, everything, financial statement, clearly presented. All material respect, right? We are not talking about immaterial matter. Material sambandha financial statement fairly present. Then financial statement prepared in accordance with Sri Lanka accounting standard or generally accepted accounting principles or other legal and other statutory requirements. In other words, financial statement comply with financial reporting framework, which is a university financial statement. It should be comply with the financial reporting framework stated in the university circulars and that university acts and all. So, financial statement comply with financial reporting framework. Then, whether proper books of accounts have been kept, auditor check whether the proper books of accounts have been kept by the auditing institution. Auditors obtain all necessary information and explanation for the purpose of audit. For the purpose of audit. That means there is no scope limitation. Turadura Ganda Barina information, if you difficult to get information so evident, that is called the scope limitation. Right? So if whatever the auditors request from the auditing institution, client, all the informations are given, all the explanations are given, then auditors satisfied. Then no misstatement. Material misstatement. Misstatement means overstatement in the financial statement or books of accounts, transactions sometimes overstated. Amounts are overstated, over depreciation, over provision, like that. Sometimes understated, sometimes omission, some transaction not brought to the accounts. These are called accounting deficiencies, lot of accounting deficiencies, right? No misstatements, no scope limitation. Scope means whatever the auditor to carry out audit procedure, whatever the information or evidence uh, can obtain to achieve the audit object. That is called scope, right? So there is no scope limitation. Sometimes some files management may refuse to give. Sometimes some information branch or other overseas branch difficult to carry out the audit due to war situation. Scope limitation. So there is no scope limitations, no misstatements, no auditor can enable to get all the information and explanation from the audit institution. Auditor find proper books of accounts have been kept. Then financial statements are comply with the financial reporting framework. Then financial statements are prepared in accordance with Sri Lanka accounting standard. Generally accepted accounting principles. There are a lot of principles are called generally accepted accounting principles, including going concern, consistency, accrual, basic principles. Then financial statements are prepared in comply or prepared or comply with the legal requirements and other statutory requirements. Auditors satisfied. Then mostly financial statements are first thing showing true and fair view or present fair. These conditions, if it is these natures are given in the financial statement, monomathya or in the audit report, you must answer. If you are not to answer, that means you can't understand. Without understanding this, we can't move for this modification. Students, if these natures are there, what type of opinion auditor can be expressed?
Unqualified opinions.
Very good, very good, very good. That response, I am very satisfied to answer. Right, unqualified or sometimes called unmodified. Modification on right? Sometimes called unmodified or clear opinion. මේ වගේ opinion තමයි කැමැති. இப்படியான அபிப்பிராயம் தான் கணக்காய்வு செய்யப்படுற நிறுவனங்களால விரும்பப்படுறது. Right? No problem. The best opinion is this. We have already discussed this opinion paragraph in the last lecture when we discussed SLAUS 700. Now we will come to modification. මේ වගේ මතය දෙන්න බැරි නම් if this type of opinion is auditor consider this type of opinion is difficult, unable to give you on the financial statement, then the solution is opinion should be modified, right? So simply say this modify කරනකොට අපේ three type of opinion තමයි දෙන්න පුළුවන්. There are three type of opinion, modified opinion, three type. Make a board. බලන්න පුළුවද? Can you see this board? Modified. Can you see this board?
Yes, sir.
Okay. Modified, three type of opinion. Modified opinions are three type. One is qualified opinion. Other one is disclaim opinion. Other one is adverse opinion. Qualified opinion මම අමතක වුණා සිංහල වචනාව මතය මේක මතය called qualified opinion. කවුරු හරි දන්නවනම් share කරන්න පුළුවන් සිංහල වචනාව qualified opinion. මුණත් කලියාන අභිප්‍රාය. This modify කරනකොට when you are modified, these three types of opinion can be expressed by the auditor. One is qualified opinion. මුණත් කලියාන අභිප්‍රාය. Second one, disclaim opinion. Disclaimer means we are reduced to give an opinion. That is not an opinion. Opinion then the barina, happy කියන්න පුළුවන්. Opinion then the back on the financial statement. It's a disclaim opinion. Other one is adverse opinion. The worst opinion is adverse opinion. So these are the three types of opinion clearly explained in this standard, right? It is not a difficult part. When you observe, when I explaining, won't be any problem. In the exam purpose, professional exams or that university academic exam, there are several ways these questions may be asked, right? Sometimes maybe explain what is qualified opinion, disclaim opinion, adverse opinion. Sometimes this opinion paragraph examiner may be expected. Komada opinion paragraph audit report standard wording. Sometimes circumstances may be given. These are the circumstances, right? Sometimes provisions for bad debt is not adequate. So likewise, opinion that books and records could not be obtained from the audit institution that finance branch fire due to fire. So these type of circumstances issues may be given. You must select in this situation what type of opinion may be given. So that there are several ways these questions may be asked, right? So this is an ultimate opinion, ultimate objective of our audit is express an opinion on the financial state. So you try to clearly understand about all these opinion. Now you understood what is unqualified opinion. Now what is modified, unqualified to unmodified opinion? Then no. Now we are discussing about modified opinion. These are the three types: modified opinion, qualified, disclaimer, and adverse. These opinions are clearly explained in this standard, right? So we will move on to the standard. So I am going to uh, deep on this because this is not a, you are not a professional. If you are a professional, they have to clearly, without any doubt, without any challenge, they should know about this. But basic things we will discuss in this standard. Right. Right. Uh, this paragraph number 4, the objective of the auditor is to express clearly and appropriately modified opinion on the financial statement that is necessary when the auditor conclude based on the audit evidence obtained that the financial statement as a whole are not free from material misstatement, or the auditor is unable to obtain sufficient appropriate audit evidence to conclude the financial statement as a whole are free from material misstatement. So these are the basic things, right? This financial statement, auditor should conclude financial statements are free from material mistake, right? Free from material misstatement means there is no misstatements. So auditors conclude that audit evidence obtained, Sakshya Monohari Dattana, that the financial statement as a whole are not free from material misstatement. Financial statements are not free from material misstatement, right? That just means there are, based on the audit evidence, financial statements are material misstatement, right? So modification, when is it possible? Financial statement, auditors conclude materially misstated, right? Based on the evidence. Based on the audit evidence, financial statements are materially misstated. So modified. The second, the auditor is unable to obtain sufficient appropriate audit evidence. Audit evidence unable to obtain sufficient appropriate audit evidence. මෙතන audit evidence ගන්න පුළුවන්. Audit evidence, it is auditor can obtain audit evidence, but auditor conclude this is financial statements not free from material mistake. There is a material misstatements are there based on the evidence. Here, auditors are unable to obtain sufficient appropriate audit evidence, right? As a whole, conclude the financial statement as a whole are free from material misstatements. So, here, the situation, you are to decide whether financial statement free from material misstatements, auditors unable to obtain audit evidence. This is sometimes called scope limitation. Unable to obtain audit evidence means scope limitation. Scope limitation means sometimes management refuse to give information. Some files or documents or vouchers, that is scope limitation. Necessary audit procedures unable to carry out by the auditor. That is scope limitation. Sometimes system itself imposed scope limitation, sometimes due to war, due to fire. So, the auditing institution are unable to provide this sufficient appropriate audit evidence. So, these are the two situations. Auditors can be modified, right? One is material misstatements based on the audit evidence. Material misstatements, that is auditor financial statements are not free from material misstatements. Other one is unable to obtain audit evidence to conclude whether financial statements are free from material misstatements. So these are the three situations. Then some definitions are given, right? Pervasive. Pervasive means a simple word that is very important, right? A term used in the context of misstatement to describe that effects on the financial statement of misstatements or the possible effect on the financial statement of misstatement. So that is pervasive means effect on the financial statements, misstatements, right? If any that are undetected due to inability to obtain sufficient appropriate audit evidence. Pervasive effects on the financial statements are those that in the auditor's judgment. Auditors, the pervasive or not pervasive, based on the auditor's judgment. If it is pervasive, very serious matter. If it is not pervasive, no problem. Right now, no problem means sometime other opinion will express, will discuss. When I explain, you can easily understand what is pervasive and not pervasive, right? Modified opinion. So qualified opinion, an adverse opinion, or disclaimer opinion. What I explained. If you are asked to define what is modified opinion, these are the or categories of modified opinion, qualified opinion, disclaimer opinion, adverse opinion. These are the circumstances. I explained these circumstances. One is auditors can obtain evidence, but financial statement not free from material misstatements. Right? Other one is unable to obtain sufficient appropriate audit evidence to check or conclude the financial statements as a whole free from material misstatement. So simply we can say modify. Why modify? Why auditor's opinion modified? One is misstatements. Other one is scope limitation. Understand? Here misstatements based auditor can obtain audit evidence, but based on the audit evidence, auditor conclude, auditor decide that there are misstatements, right? Sometimes depreciation check කරන්න පුළුවන්. Depreciation ඔක්කොම based on the evidence, sometimes auditor found depreciation is not adequate. So depreciation charge is not adequate. So misstatements. Right? Sometimes it's pervasive or not pervasive. Right? So scope limitation. Scope limitation means to check the depreciation, auditors are unable to obtain the audit evidence. Charge ganda barina scope limitation. So simply you should know why modification or what are the circumstances auditors are modified their opinion. There are two circumstances. One is misstatements in the financial statement based on the audit evidence. Second reason, there is a scope limitation. Due to scope limitation, auditors are unable to obtain necessary or sufficient appropriate audit evidence. So these are the two reasons auditors express modified opinion. So auditors need to modify their opinion. Right. I hope up to now you understood this. Right. Then අපිට there are අපිට that our purpose is try to understand these three type of opinion, right? Try to understand three type of opinion. That is qualified opinion, disclaimer opinion, adverse opinion. Right? Try to understand this. According to the standard, what is qualified opinion? What is qualified opinion? Right? You can read this. The auditor, having obtained sufficient appropriate audit evidence, conclude that misstatements individually or in aggregate are material but not pervasive to the financial statement. Material, not pervasive. So I will put in the diagram. you want to clearly understand, to try to draw this, right? Material, right? Misstatements are auditors having obtained sufficient appropriate audit evidence conclude the misstatements are individually or in aggregate are material, not pervasive. Material, not pervasive. What is the situation? What is the situation? Misstatements. Misstatements in the financial statement. Material, not pervasive. What is that? Material, not pervasive. If the depreciation for any fixed assets not made, what is that? Material, not pervasive, or material and pervasive. What is that? Students, you should clearly understand, right? I can put this diagram and I can mark and go, right? I am giving some example, right? So qualified opinion, when the auditor express qualified opinion. This misstatements, material not pervasive, auditor can give a qualified opinion. That means that, for example, depreciation made is not adequate. Auditor consider depreciation is made, but not adequate. So material, but not pervasive. That is, check the whole financial statement. It is not a pervasive. Auditor consider it is not a pervasive. So it is not an important, but material. But he can qualify. These qualifications, the auditor's qualified paragraph, he can give all the qualifications. This is the one of the qualifications. But material and pervasive, this is very serious nature. No single assets made up depreciation. So material and pervasive, very important. So this is adverse opinion. Adverse means there's a pervasive. Misstatements are pervasive, adverse opinion. This is the worst opinion. We'll discuss later, right? So now, according to the standard, a auditor having obtained sufficient appropriate audit evidence conclude that misstatements individually or disaggregate are material but not pervasive. Material, not pervasive, qualified opinion. The second situation is scope limitation. Auditor unable to obtain sufficient appropriate audit evidence. Unable to, scope limitation. Unable to obtain sufficient appropriate audit evidence. Material, not pervasive, but the auditor conclude the possible effects on the financial statements are of undetected misstatements, if any, could be material, not pervasive. Material, not pervasive. Qualified. For example, when you carry out audit, the auditing institution are not giving certain vouchers. Certain vouchers are not given in a particular month for some amount. That is material and perverse. Material, not perversive. But if the whole month vouchers, the Eastern University, January to December voucher, payment voucher not given to the auditors. What is the situation? Material and perversive. Auditor conclude that those are material and perversive. Material and perversive is not disclaimed. Material and perversive. Disclaim opinion. Here, certain files, certain important documents, sufficient appropriate audit evidence, Ganda Barina, auditor can qualify. For example, certain branch unable to visit auditor, a scope limitation. That sufficient appropriate audit evidence, certain branches unable to obtain. That is a qualification. But other branch, other head office, evidence are obtained. Here, certain branches, material not perversive, so qualified. All documents, that for example, Eastern University finance branch is destroyed by fire. But financial statements are given to auditors for audit report. The auditors unable to examine this financial statement because all the records, books, vouchers, ledgers, everything is destroyed. So this auditor can consider this a material and perversive. Material and perversive. Material and important, very important. Misstatements are important. So disclaimer. Disclaimer means auditor in his opinion, auditors is unable to obtain audit evidence to express an opinion, unable to obtain sufficient appropriate audit evidence to express an opinion on the financial statement. That is called disclaimer opinion. Disclaimer opinion. Right? Here, Duraduru Ganda Puluan, but this material not perversive, not perversive now, not perversive now, qualified. Material and perversive now, this situation, this statement now, adverse opinion. This statement is what limitation now, disclaimer opinion. These are the things, these are the areas very clearly explained here. Right. So now I hope you understood what is qualified opinion. What is qualified opinion that is given here? I am repeating once again. The auditor having obtained sufficient appropriate audit evidence conclude that misstatements individually or in aggregate are material but not pervasive to the financial statement. This situation. Right? Auditor can obtain sufficient appropriate audit evidence. Can obtain. Here, evidence based on the evidence, misstatements is material, not pervasive. Here, second one, the auditor is unable to obtain sufficient appropriate audit evidence on which to base the opinion, but the auditor concludes the possible effects on the financial statements of undetected misstatements, if any, could be material but not pervasive. Material, not pervasive. Qualified. These are the two situations auditors give qualified opinion. These two situations I explained here. Right? One situation is misstatement, other is scope limitation, right? So these two situations, the matter is a material, not pervasive. Material, not pervasive, right? Then adverse opinion. So what is adverse opinion? This is the worst opinion. This is the worst opinion, right? So you can't rely on the financial statement. Ultimately, the financial statement not show true and fair value, right? Not show true and fair value. It is an adverse opinion, right? I will read that opinion. Auditor shall express an adverse opinion when the auditor, having obtained sufficient appropriate audit evidence, conclude that misstatement individually or in the aggregate are both material and pervasive to the financial statement. Auditor can express an auditor can obtain sufficient appropriate audit evidence. Here, evidence can obtain, but these misstatements are right individually or aggregated conclude material and pervasive. Material and pervasive, right? This adverse opinion. For example, one company is purchasing another company, but this company acquired another company. Another company's financial positions, financial performance are not amalgamated with this company's financial state. These are the material and pervasive matter. Home of these misstatements, the evidence kandapuluvan. Based on the evidence, auditor concludes that these are the material and pervasive. So adverse opinion. Sometimes depreciation for whole assets, provisions for whole bad debts not provided. So that auditor conclude that if they provided, the going concern is doubt. So auditor conclude that these are the material and pervasive. These misstatements are material and pervasive. So the financial statement does not show true and fair view. Enisha, adverse opinion. Right? Adverse opinion is the worst opinion. That in the bottom of this standard, there are several examples given. Once you understand this stage, then you can easily identify what are the examples. Right. So for another example, no depreciation provided. Right? That is, or to conclude, this misstatements is material and pervasive. That is called adverse opinion. Once again, I am reading the adverse opinion. Auditor shall express an adverse opinion when the auditor, having obtained sufficient appropriate audit evidence, conclude that misstatements individually or in aggregate are both material and pervasive to the financial state. Material and pervasive to the financial state. Then disclaimer. It's a disclaimer. Disclaimer means auditor refused to give audit opinion. That is, the auditor shall disclaim an opinion when the auditor is unable to obtain sufficient appropriate audit evidence on which to base the opinion, and the auditor conclude that the possible effects on the financial statement of the undetected misstatements, if any, could be both material and pervasive. Undetected material and pervasive disclaimer opinion. Right? Here, through Ganda Barina, scope limitation, right? Disclaimer. That early example I have given the the finance branch is destroyed by fire. So these are the material. Auditor conclude the material and purpose. Right? This evidence is sufficient appropriate audit evidence and the barrier. Scope limitation. Enisa opinion Mathiya Dendava. Opinion is not expressed or disclaimer. Right. So I hope up to now, right? I hope you understand what is qualified opinion. What is qualified opinion? Right? This qualified opinion. What is adverse opinion? This is one, two adverse opinion. This is opinion. Right? So in the standard, where the examples are given, right? The examples are. This is the important matter, right? Examples are given. There are so many examples. Basis for modification paragraph. Whatever the auditor opinion is given in the standard, according to the standard audit report, you should give a basis for opinion, whatever the opinion is given. Here, basis for modification paragraph. Modified karanakota, you can give qualified opinion or disclaimer opinion or adverse opinion, right? So, basis for the modification paragraph, when the auditor modified the opinion on the financial statement, the auditor shall, in addition to the specific element required by SLA US 700, include paragraph in the auditor's report that provide a description of the matter giving rise to the modification. So you must state why you are modifying, reasons that is given in the audit report. The auditor shall place this paragraph immediately before the opinion paragraph in the auditor's report and use the heading basis for qualified opinion, basis for adverse opinion, or basis for disclaimer of opinion. Unmodified opinion, then there is no need. You must clearly understand, right? You must clearly understand, student, when you are giving unmodified opinion, basis for unmodified opinion, not necessary to give in the audit report, but you are modified, audit opinion is modified, you can give a qualified opinion or adverse opinion or disclaim opinion. So in this situation, you must give in the audit report basis for qualified opinion, basis for adverse opinion, basis for disclaim opinion. Make it clearly then known. Right? Paragraph 17. It should be quantitative and disclosures, right? Basis for modification paragraph, description and quantifications. Quantification, you must give the amount. Depreciation is not provided. You must quantify how much could have been depreciated amount, right? That is affected in the ultimately affecting the profit or loss. Not depreciated, profit may be overstated. You must state the qualification. Oh, profit is overstated by a certain amount. Quantification. Unless it's impracticable, you must give a quantification. Effects of the that effects should be quantified. And discloses modification. You must disclose sometimes not disclosed informations required to be disclosed. For example, contingencies. At the end of the year, there's a court case filed against this company. At the reporting date, outcome of this court case not known. It may be gain or loss. Sometimes this will affect the company. Sometimes not affect. So this is called contingencies. According to the standard, all the contingencies should be disclosed. All the contingencies should be disclosed in the financial statement. If the auditing institutions fail to disclose, what can you do? Auditor, what can you do? What type of opinion? Discuss the non-disclosed with those charged with governance. You must discuss with the management, the company, why you are not disclosed. According to the standard, it should be disclosed. All the contingencies. Why you are not disclosed? So you must discuss with the governance or those charged with governance or management. That is first thing. Second thing, describe the basis for modification paragraph, the nature of the omitted information. This is omitted. The information is not brought to the financial statement. So misstatements. Financial statements are misstated. Right? And the second one is this basis for modification paragraph. The nature of the omitted information you must give. So, third one, unless prohibited by law or regulations, include the omitted disclosure, provided it is practicable to do so, and the auditor has obtained sufficient appropriate audit evidence about the omitted information. So all court case information, auditors should be get, right? Unless prohibited by law or regulations, auditor should get the all evidence and required to management to disclose. If they refuse to disclose, so misstatement, you must qualify. You can qualify. If the modification results from inability to obtain sufficient appropriate audit evidence, auditor shall include the basis for modification paragraph, the reasons for the inability. So, modify Karanakota, auditors is unable to obtain the sufficient appropriate audit evidence. You must give the reasons. So, due to the short shear, the evidence, difficult to get it due to war or due to fire. All the details should be given in the modified paragraph, the qualification audit qualification paragraph. Auditor adverse opinion or disclaimer opinion on the financial statement. Auditor shall describe the basis for modification paragraph, the reasons for any other matters, even modification, the adverse opinion or disclaim opinion, you must give the basis or reasons should be given. Opinion paragraph. Then we will see these examples. You can read this. This is type of modification. What is given in the standard? This chart is given. First column, auditor's judgment about pervasiveness of the effect of the possible effects on the financial statement. Material, not pervasive. That is first column. Second column, material and pervasive. Here, matter giving rise to the modifications. These are the reasons for modifications. Financial statements are materially misstated. Here, financial statements are materially misstated. Other one is inability to obtain scope limitation, unable to obtain sufficient appropriate audit evidence. So, material and pervasive, material not pervasive, qualified opinion. Material and pervasive, if the financial statements are materially misstated, the misstatements, so auditor consider that is material and pervasive adverse opinion. If a scope limitation situation, auditor consider that matter is a material and pervasive. So, for example, contingent liabilities. For this contingencies, information sufficient, appropriate audit information, evidence, unable to obtain that necessary evidence are unable to obtain. Then the management refused to give. Auditor consider this material and pervasive. Auditor think that this matter is a material and pervasive. He can disclaim opinion. He can give the opinion, unable to express an opinion on the financial statement. Sometimes selected accounting policies are not appropriate. Selected accounting policies application is wrong and not adequacy. These are the misstatements are given so many ways. Selected accounting policies may be wrong. Selected accounting policies may be wrong. Then application of selected accounting policies is a problem. Then disclosures, appropriateness of adequacy of the disclosures. Due to this, misstatements may be arise. In the examples, we will give 2-3 examples, and here nature of an inability to obtain sufficient appropriate audit evidence. Auditor's inability to obtain sufficient appropriate audit evidence, referred to as limitation of scope of audit, may arise from sometimes examiner will ask in what how the limitation of scope may be arise. Circumstances beyond the control of the entity. Circumstances beyond the control of the entity. Sometimes due to war, auditors, the management unable to arrange the auditors' visit to the branch. Circumstances beyond the control of the entity. Sometimes the fire or natural disaster, cyclone or tsunami or whatever it is. So, circumstances beyond the control of the entity. That is why scope limitations arise. The scope limitation means auditors are unable to obtain sufficient The circumstances beyond the control of the entity. That is one aspect. Second one, circumstances related to the nature of the timing of auditors' work. Sometimes auditors appointed late. So auditors unable to carry out necessary audit procedures. This is also one type of scope limitation. Due to scope limitation, auditors are unable to obtain personnel files, these tender files, this not given to auditors. So limitation imposed by management. So this reason, scope limitation arise in three ways, right? Then this scope limitation sometimes may be disclaim opinion, sometimes may be qualified opinion. The method, the particular method is a material, not perversive. The particular method is material and perversive. You can disclaim. So I hope you understood what is limitation of scope or how the circumstances arises for inability to obtain sufficient appropriate audit evidence. There are three situations arise to auditors unable to obtain sufficient appropriate audit evidence. And these are the examples for the beyond control of the entity. The entity's accounting records have been destroyed. The accounting records of the significant component have been seized indefinitely by governmental authorities. Sometimes the records of the branch are seized by the government authorities, tax authorities, taken all these books or records. So beyond the control of the entity, scope limitation, nature, timing of auditors' work, that is given, examples are given, right? Sometimes inability to obtain sufficient appropriate audit evidence arising from limitation of scope. This is called imposed by management. Management impose scope limitations. This is called management imposed scope limitation. Sometimes management prevents the auditor from observing continuing of the physical inventory. Management give barriers to auditors not to observe physical count of inventory. The scope limitation. Scope limitation. Management prevents the auditor from observing the counting of the physical inventory. Necessary audit procedures unable to carry out. That is a scope limitation. This is called management imposed scope limitation. Second one, management prevent the auditor from requesting external confirmation of specific accounts balances. So management prevents the auditor from requesting external confirmation. So auditors normally bank balance, debtors balance, creditors balance. Within the entity, he can check, but sometimes auditors take the confirmation from outside parties. For example, the bank balance shown in the Eastern University financial position. So all the bank balances, auditors directly communicate with the respective banks and get the balances at the year end. That is called external confirmation. Likewise, all the debtors, creditors of the organization, auditors directly communicate with all these debtors and creditors and get the confirmation of the balances. That is a normal practice of the auditor. But management prevent not to do that. This is a limitation of scope. This is a limitation of scope. This is called management imposed limitation of scope. So, due to this limitation of scope, auditors are unable to obtain sufficient appropriate audit evidence. This is called management imposed scope limitation. Right. So you must know that sometimes system imposed, that is system imposed, that is beyond the control of the entity and other matters. This is called uh, management imposed scope limitations. We are giving some example. Illustrative auditor's report, illustration 1 and 2 is appendix contain auditor's report, the qualified and adverse reports respectively financial statements and material stated. So this illustration we will give some example. Here you see this qualified opinion, right? A basis for qualified opinion. Companies' inventories are carried out in the balance sheet. Management has not stated the inventories at the lower of the cost and net realizable value, but has stated them solely at cost, which constitute a departure from Sri Lanka accounting standards. The company's records indicate that had management stated the inventories at the lower of the cost and net realizable value, an amount of sum would have been required to write the inventories down to their net realizable value. Accordingly, cost of sales would have been increased by so much, and income tax, net income, and shareholders' equity would have been reduced by so much, and so much of respectively. So this you see these qualifications in this case. Normally, according to the accounting standard, the inventory should be given at what value? Cost on net realizable value, whichever is lower. Cost on net realizable value, whichever is lower. But here, management is not practice this accounting standard requirements. Due to that, stock is overstated. If the stock is overstated, profit also overstated. Profit overstated, everything is problem, right? The tax, everything is problem. So these are the misstatement. So the qualification, misstatement, qualified opinion, material not purposive, material not purposive. This is the qualified opinion. Basis for qualifications. Not stated the inventories at the lower of the cost and realizable value. At cost, they are stated inventory at cost. So they are not considered cost on net realizable value, whichever is lower. Right? These are the audit qualifications. The basis for qualified opinion. So this due to that, inventory should be write down their net realizable value. Cost of sales would have been increased. Income tax effect, shareholders equity effect, all these effect are for the qualification. Other example, for the qualified opinion, when you give misstatements, material not pervasive. Here, in our opinion, except for the effects of the matter described in the basis for qualified opinion paragraph, the financial statement fairly presented in all material respect. So, if at last, after basis for qualification, he should state, except for this matter, except for the above mentioned matter, all other matters are financial statement fairly presented. That is why material not pervasive. That is why due to this, only these are the only qualifications. These are the only qualification. Other matters are auditors satisfied. So he can say this qualified opinion, except for the effects of the matter described the basis for qualified opinion, the financial statement fairly present. That is why the financial position and financial performance, cash flow, then year ended accordance with the Sri Lanka accounting standard. These are the standard paragraph. In practice, all the audit reports you can find this type of wording, right? The other example, illustration 2. Illustration 2. Here, adverse opinion. We are this misstatement situation. We discussed qualified opinion due to non-comply with Sri Lanka accounting standard. Cost on net realizable value. The inventories are not according to that. So this qualification, due to this qualification, we earlier discussed qualified opinion. Now we will see the adverse opinion, right? As explained in the note 10, the company has not consolidated the financial statement of subsidiary. This is very serious. XYZ company, it acquired during the year because it has not yet been able to ascertain the fair values of certain of the subsidiaries, material assets and liabilities at the acquisition date. This investment is therefore accounted for on cost basis. Under Sri Lanka accounting standard, the subsidiary should have been consolidated because it is controlled by the company. So these are another issue that when they consolidated the subsidiary companies, when they acquired the company, subsidiaries the assets liabilities not accumulated, not consolidated with this. These are the material and pervasive. That's why adverse opinion, because you have violated the standard, the material and pervasive, right? These are, you can, in our opinion, because of the significance of the matter discussed in the basis for adverse opinion paragraph, the consolidated financial statement do not present fairly. So the adverse opinion, then you should know the financial statements are not showing true and fair view. Do not give true and fair view of the financial position of the ABC company and its subsidiaries and their financial performance and the cash flow in accordance with the Sri Lanka accounting standard. This is a standard format of the adverse opinion. Students, in practice, there is no such opinion is given. A very rarely situation only is the adverse opinion. So another example, we will see this. We have given this example Here, example, subsidiaries company not given in the consolidated accounts. Material and purchasing. Here, stock was stock, net realizable value, not fund over. Valuation of Sri Lanka Polish standard. So these are the mistakes. These are misstatement very serious. Others, these are material, not purchasing. Other matters are okay. Here, other matters are okay. Here, all matters, the financial statement do not show for a fair view. So some more example for this and this. This basis for qualified opinion. So here, scope limitation. Auditors state that ABC company's investment in XYZ company, a foreign associate acquired during the year, accounted by the equity method. So investment in the subsidiary company, associate company, that equity method they shown, but auditors are unable to obtain sufficient appropriate audit evidence. Includes financial position. We are unable to obtain sufficient appropriate audit evidence about the carrying amount of ABC investment in XYZ as at 31st December. ABC shares of ABC XYZ's net income for the year because we are denied access to financial information management and the auditors. Consequently, we are unable to determine whether the adjustment to the amounts were necessary. So, sufficient appropriate audit evidence, management denied to give. So, these are the material, not pervasive. Qualified opinion, but qualified opinion, then about the, we can say, except for this, other matters are okay. Other matters are financial statement showing fairly presented. This except this this matter mentioned here, right? The sufficient appropriate audit evidence unable to obtain. Other matters are okay. This is qualified opinion. Then disclaim opinion. Example for disclaim opinion. Here. Basis for disclaim opinion. We were not appointed as auditor of the company until after 31st December and thus did not observe the counting of physical inventories at the beginning and the end of the year. We are unable to satisfy ourselves by alternative means concerning the inventory quantity held at 31st December, which are stated in the statement of financial position. In addition to that, introduction of new computerized account receivable system in September 2001 resulted in numerous errors in the accounts receivable. As of the date of our audit report, management was still in the process of rectifying the system deficiencies and correcting the errors. We are unable to confirm or verify the alternative means accounting receivable included in the statement of financial position. So here, ultimately what is given is a very serious nature. Auditors are unable to obtain sufficient appropriate audit evidence. Why? Auditors are appointed late. after the end of the financial year. So physical verification unable to obtain, physical verification of inventory unable to observe. So quantity is down. Then receivable, still receivable amounts are in the computer process. So they are unable to get all the evidence. So these auditor consider these are material and pervasive. So auditors give disclaimer opinion. Disclaimer opinion means auditors state that we are unable to, because of the significance of the matter described to the basis of disclaimer opinion, we are not being able to obtain sufficient appropriate audit evidence to provide basis for audit opinion. Accordingly, we do not express an opinion on the financial statement. We do not express an opinion on the financial statement. Disclaimer means we do not express an opinion on the financial statement. Right? I hope you all understood the examples and that circumstances. So, right. So, I am repeating the section, right? I am asking a question from you, right? What are the type of modified opinion can we give an auditor in this report? What type of modified opinion are available according to the standard SLA US 705? Please answer. Answer.
Qualified opinion, disclaimer opinion, adverse opinion.
Very good, very good. I am very happy about your understanding, your response and feedback. I already informed you. I will do the revision. Right? Some students are disturbing me and chatting. Sir, please revise the all chapters. It will help to us to study. Sir, please do revision. This I already at the beginning. Whether you are attended the class or not. At the beginning I told you that I will explain everything. I will whatever possible I can revise the chapters. I told you no. You are not concentrating in this important discussion. You are chatting other matters. Please try to concentrate. You can't get this type of knowledge from outside. So you must understand. So please wait until complete this standard, and after that I can explain the revision. I can do the revision. Don't disturb. Right. Now we are revising this. Another question I am asking students, uh, what are the situation or circumstances to modified opinion? Modified opinion, what are the situations you can modify? What are the main situation you can modify the audit opinion? Please answer. What are the two situations auditor can consider to modify the audit opinion? Right? One student's answer. Very good. Misstatement and a scope limitation. Very good. Very good. Misstatement and scope limitation. Right. Then qualified opinion. When auditor can express the qualified opinion, or what are the two situations auditor can obtain, auditor can express uh, two situation, and what is the condition for express the qualified opinion? Please answer. Right. Material, not pervasive. No. This I am asked qualified opinion, students. Qualified opinion only to one condition, material and not pervasive. The matter is material, not pervasive. It may be misstatements. The matter is a misstatement or scope limitation. But condition, material, not pervasive. Right. Other thing, uh, what do you understand the adverse opinion? Adverse opinion. What do you understand about adverse opinion? The misstatements. Auditor, in the adverse opinion situation, auditor can obtain sufficient and appropriate audit evidence. But based on that, auditor consider these are the misstatements. These misstatements are material and pervasive. Auditor consider material and pervasive. So the auditor express adverse opinion. So adverse opinion means financial statement does not show true and fair view. For example, acquired companies, subsidiaries companies, assets or liabilities not consolidated in the financial statement. So auditor consider these are the necessary. So material and pervasive. So adverse opinion. So in other words, contingencies. Contingencies are not disclosed. Management refused to disclose. The auditors stated that you must disclose. Management refused. So auditor consider the evidence are there, but there are some misstatements. So unless disclosed, financial statement does not show true and fair view. So adverse opinion. So disclaim opinion. What do you think about disclaim opinion? When the auditors are unable to obtain sufficient and appropriate audit evidence, an auditor considers which situation is material, this condition is material and pervasive. For example, the auditing institution finance division destroyed by fire. So necessary, important, basic, the evidence, books, records, vouchers, nothing there. So auditors are not in a position to give an opinion. Matte then the back. It's called disclaim opinion. Sometimes uh, management imposed scope limitation. This is called scope limitation. Management not given. Sometimes auditors are late appointed, so not possible to observe physical verification of stock. Right? So these are the material and pervasive nature. So sometimes my management refused to give all documents, books, or records, or refused to get external confirmation by the auditor, all debtors confirmation, creditors confirmation, bank confirmation. Management refused to obtain by the auditor external confirmation. Sir, auditors unable to obtain sufficient appropriate audit evidence. So, material and purposive disclaimer opinion. So, I hope you all understood this type of uh, or modified opinions, right? Uh, you can once again you can read the standard, right? Uh, you should know what situation auditors can modify, what type of modified opinions are available. You should know what is qualified opinion, what is adverse opinion, what is disclaimer opinion. Sometimes you must know in what situation what type of opinion can be expressed, right? Sometimes basis of qualified opinion you should know. Basis of uh, adverse opinion, basis for disclaimer opinion, you should familiar with this, right? So that is given, the situations are given the standard. I hope with this information I can uh, uh, complete this standard. So you must, I have lot of other diagrams also, no time to do that, right? Uh, that unmodified opinion, modified opinion, there are other diagrams available. With this, I hope this you all understood. Students, I wanted feedback from you. Can you understand this? Yes or no?
Yes, sir.
Okay, thank you very much. So we will have a break, 10 minutes break. After that, we will discuss about this revision. That is a purpose I arranged this last lecture class. Yesterday also, one or two students asked me what are the areas or is there what we have to study. A lot of questions I asked. So don't worry about the exams. Exam maybe or you can easily whatever studied here. If you refer that those notes and lessons, it won't be any problem. Only problem you can getting A or B, right? Anyhow, after 10 minutes break, we will revise what are the that areas we can expect for the exams, right? So we will. Shall we have a break for 10 minutes? 1 minute. One chat is there. How the exam paper is? Exam paper is. I could 011 register number from 011. What you are asking? How the exam paper is? Uh, paper is marked. Uh, I will explain to you. Don't worry. Exam paper is made, right? I will explain everything after the break, right? Uh, any clarification you can ask after this revision, right? So we will wind up now 10:26. We will meet once again after 10:40. We will meet 10:40. At 10:40 we will meet again. Okay.
Yes, sir.
Okay, right. Shall we? Can you hear me? Can you hear me?
Yes, sir.
Okay. Now we will discuss relating the exam paper. I hope you all are having past papers. Based on the past paper, this this subject is auditing and assurance. From 2053. Is it okay? Exam paper title 2053.
Yes, sir.
Okay. Altogether, there are four questions. Yes, four. All questions should be answered. All are compulsory. There is no optional questions. Each question is having parts 4 or 5. Equal marks for each questions. 25 marks for each questions. Right. This is the exam paper. Uh, your batch is 2020 or 21, 22. What is your number? So I am omitting that one, right? Altogether, four questions. Uh, each questions carries equal marks. All are compulsory. There is no optional questions. Right now, we will see what are the areas we covered. What are the areas we have to give more weight for this exam. But I hope you all are having your notes and all. You must. I am asking from you. Uh, what are the areas we covered from the beginning? Students, you are having only 1 week for the exam. You must get ready, right? Our intention is no single students uh, not fail, right? So if you fail, everyone is problem. You also problem, we also problem, management also giving a problem giving to management to have a repeat exam and all. Lot of problems are there. So you are having 1 week. If you are properly planned this 1 week, it won't be any problem. Even if you are not studied, if you are not attending for the lecture program, forget about that, right? Based on this information, you plan your study and that areas properly studied the areas, so it won't be any problem. So we hope you all get through the exam. Last time also a lot of students come down. I don't know what are the reasons. So try to listen, right? So I am asking from you, what are the at the beginning? What are the area? So from the beginning, what are the areas we discussed? You are having marks. You are having notes, no? I explained the introduction part. Introduction. We discussed what are the parties involved in the field of auditing. What is auditing? What is accountability? What is financial statement? Uh, Accountability. Parties involved in the field of auditing. What is financial statement? Who are the stakeholders or interested parties? What is true and fair view? What is generally accepted accounting principles, right? Who is the auditor? What are the qualities of the auditor? Those are the matters I think we discussed, right? In these areas, everything may be tested, right? So maybe you should know what is accountability, what is financial statement, what is generally accepted accounting principles, right? Qualities of the auditor, so rights of the auditors. All we discussed, isn't it? Right. Second, I think we discussed the subject related to assurance. Students, you must share with me what are the areas we discuss in this session. Assurance, concept, concept of the assurance, definition, benefit of the assurance, elements of assurance engagement, uh, relationship between auditing, attestation, and assurance engagement, auditing, attestation, assurance, limited assurance, and absolute assurance. What are the limited assurance and absolute assurance? Uh, what else we discussed? Concept of assurance, definition of assurance, benefit of assurance, elements of assurance engagement, right? Last time we tested the definition of assurance engagement, elements of key elements of assurance engagement, difference between reasonable assurance and absolute assurance, all tested. So you should know about this limited assurance, absolute assurance, and what else other than this? What we discussed, relationship between auditing, assurance engagement, and attestation. Students, in this section, what are the other areas we discussed? Students, you, you all are keep silent. I don't know. Right. Second area, we have discussed standard. What are the standard we discussed? SLA is 200. SLA is 200, making the overall objective of internal auditor and the conduct of an audit in accordance with Sri Lanka auditing standard. Right? Overall objective of audit. In this standard, you should know that last time we have tested, right? Overall objective of the auditor in conducting an audit of financial statement. Last time tested. So certain definitions are there, right? Applicable financial reporting framework. The definition we discussed, applicable financial reporting framework. You should know what is this applicable financial reporting framework. Then you should know under this standard also we have separately discussed the evidence, separate standard. Under this standard also given some definition. It is audit evidence, audit risk, auditor, financial statement. This statement, professional skepticism. So you should know what is professional skepticism. So we have already studied reasonable assurance, risk of material misstatement, all under this standard. Applicable financial reporting framework, the definition we discussed. Professional skepticism. Professional skepticism means an attitude that include a questioning mind. Auditor, you can't simply accept everything. You must have a questioning mind. This is important. Being alert to condition which may indicate possible misstatements due to error or fraud and critical assessment of audit evidence. This professional skepticism means critical assessment of audit evidence. So you must know that professional skepticism. So auditor පාවිච්චි කරන්න ඕන. audit කරනකොට auditor professional skepticism පාවිච්චි කරන්න ඕන. What is Karanakotta? Applicable financial reporting framework. You must check whether the financial statement in accordance with the applicable financial reporting framework. You should know what it is. Applicable financial reporting framework. Then audit risk avadana, vikna avadana, kanakaiva avat. There are this definition that the auditors giving an inappropriate audit opinion when the financial statements are materially misstated. That is called audit risk. Audit risk. Varadi මත්ය දෙන්න පුළුවන් auditors in trouble. ඒ නිසා තමයි audit risk. Auditors try to have a risk at minimum level. Risk-based auditing, we call it risk-based auditing. We assess the risk. Before carried out audit, we have to assess the risk. So you should know what is risk, what are the components of this risk. Inherent risk, controlled risk, and detention risk. Three type of risks are there in audit. So you should careful. Then we have to here we should study the reasonable assurance. Auditors are giving always reasonable assurance, not giving absolute assurance. So due to some reasons, so reasonable assurance means there's a 100% audit is not possible. Even though audit is completed, there may be a possibility of misstatements. You can't avoid this. That is why auditors are not giving a absolute assurance. That is not possible. Auditors are always giving a reasonable assurance. Why? Any evidence are not a perfect, not a conclusive evidence. Limitation of internal control system. So there are so many reasons auditors are. I am not taking the lecture, right? So reasonable assurance you should know, right? What is reasonable assurance? Why auditors are not in a position to give an absolute assurance, right? So this standard. So each and everything we study, right? Professional skepticism, ethical requirements. Last time, other one is ethical requirements. Independence, integrity, objectivity, due professional care, technical standard, professional behavior. There are 7 ethical requirements auditors should carry out when carrying out audit. Independence, integrity, objectivity, due professional care, and professional behavior, technical standard, and all are 7 ethical requirements, including professional skepticism, right? In the standard we have studied. Confidentiality also one of the principles. So you must know. You can sometimes list out. Sometimes you must understand what is confidentiality, what is independence, integrity, objectivity, right? Professional behavior. So you should know what it is. There are main 5 principles are there requirements. You should know what it is. Mhm. Uh, these are the areas. What is the next standard we discussed, students? What is the next standard? I don't know. You are. Can you hear me? What is the next standard? SLA is 210. Agreeing the terms of engagement. Uh, agreeing the terms of engagement. Under that, we discussed the condition for audit. So you should know what is engagement, or engagement letter. What are the benefits or advantages or purpose of contents of main contents of letter? Then recurring audit, engagement letter and recurring audit. Engagement letter in the case of components. A separate letter, whether to issue a separate letter or not. The main contents, and when relevant are the matters to be included. Then recurring audit to decide to separate engagement letter or not, that is depending on certain factors. An audit of components. Audit of components when you decide to issue a separate engagement letter to the components or not. There are 5 points to be given. Based on that 5 points, auditor can decide. So engagement letter should be prepared by the auditor, right? Based on this standard, we should prepare. So engagement letter should be prepared by the auditor with the relevant contents in accordance with the Sri Lanka auditing standard, and get it signed or acknowledgement from the client before commencement of audit. There are a lot of benefits of letter of engagement. The purpose of letter of engagements is between misunderstanding between the client and auditor. Another benefit also there, right? So these are the matters. So what are the precondition for audit? Benefit, purpose of audit, contents of letter of engagement. When relevant, what are the points to be included? Recurring audit. What are the matters to be considered to issue a new letter? And when there is a component, what are the factors decide to factors based on these factors decide to issue a separate engagement letter for the components. So these are the matters we discussed. The last question paper, what is the question? Do you have a exam paper? Past papers? And last time it was tested. The main purpose of a letter of audit engagement letter. Second one, 6 important matters to be included in the audit engagement letter. 6 important matters to be included, right? The purpose, right? This is letter of engagement. Third standards are discussed. Students, have we discussed quality control 220? Have we discussed quality control? You must say yes or no. Otherwise, this area also will be tested. I forget whether we discussed or not. I am doubt. Students, you should
No, sir.
answer. Sorry?
No, sir.
Ah,
No,
right,
sir.
right. Thank you, thank you. That's why I am confusing. This quality control we are not discussed. And 230 documentation or working paper.
Yes, sir. 213.
Okay. Documentation. Documentation of working papers. We have discussed this standard. Um, the meaning of documentation. What is documentation? Meaning the record of audit procedures performed, relevant audit evidence obtained, and conclusion the auditor reached, such as working papers or work papers, are also sometimes used. So the definition is the record of audit documentation is the record of audit procedures performed, relevant audit evidence obtained, and conclusion the auditor reached. Right? That is documentation, right? It's audit file. These are the reasons why the documentation of working papers or purpose of documentation. The objective of auditor of documentation. These are the one is sufficient to obtain sufficient and appropriate audit evidence. Second one is to ensure the audit is planned, performed, and reportings are it comply with the or in accordance with the Sri Lanka auditing standard. That is why documentation is. So these are the areas discussed in the documentation. Last time, uh, State 3 primary objective of audit documentation, as mentioned in the SLA US 230. What are the 5 factors affecting form, content, and extent of audit documentation? These were 2 questions last time tested, right? Form and contents of the audit working papers, right? So, objective of working papers also we have tested. Don't think uh, whatever tested it won't repeat. So don't think that. So you must study that also. Sometimes some other way will be tested, right? Other standard. Two hundred forty. Auditor's responsibilities relating to fraud in an audit of finance statement, right? uh, you must know the uh, two types of intentional misstatement, right? Two type of misstatement. misstatement relating to fraudulent financial statement, misstatement relating to the fraudulent financial statement, misappropriation of assets. How committed misstatement relating to the fraudulent financial statement. How you can commit misstatement relating to the misappropriation of assets. How you can commit.
Excuse me, sir.
Yes. Yes.
Board is not available, sir. Visible.
Board. Right. I can write down here. Thank you. Misstatement relating to the fraudulent financial statement. Misstatements, two types. Fraudulent financial statement, misstatement related to the misappropriation of assets. How it occur? I think last time we tested this area. I will check. 240, no? Right, yes. As per the SLAS 240, auditor's responsibilities relating to the fraud in an audit of financial statement. What do you understand the term fraud and fraud risk factors? Fraud and fraud risk factors state three ways in which a misappropriation of assets can be accomplished. Misappropriation of assets, ways of the misappropriation of assets accomplished, last time tested. Relating to fraudulent financial statement, how we commit. We should know this, right? Fraudulent financial statement. The statements, two types, misappropriation of assets, fraudulent financial statement. And this time, misappropriation of assets, how can be accomplished? That last time I tested relating to the fraudulent financial statement, how you can commit, you should know, right? So last time also you can read that. Then responsibility for prevention and detection of fraud. So both responsibility you should know relating to the fraud. Responsibilities for auditor and management. So prevention, detection of fraud. What are the management responsibility? What are the auditor's responsibility? You should be discussed this. So what? So there is a definition. Fraud and fraud risk factors. So what is fraud and fraud risk factors? You should know fraud. What is the definition of fraud? What is the definition of error? This is fraud is an intentional act. This is unintentional act. There are example also. Errors example also available. Then fraud risk factors. Last time tested to ask what you understand. Fraud risk factors. What you understand fraud risk factors. You should know the examples of fraud risk factors. There are several examples in the standard. The Appendix 6, several fraud risk factors we discussed, right? Several example of fraud risk factors. You must know at least 5 or 6 fraud risk factors, right? You must alert, right? Fraud risk factors. Then management fraud. I have apart from this standard additional slides also explain. Well, in the standard also you can see this management fraud in employment. Employees fraud. Employees fraud. Right, you can because the main area we discussed, right? Then other standard SLA is 250. Considering the law, rules, regulations in an audit of finance statement, are we discussed the standard? Yes or no?
No, sir.
Okay, fine, right, thank you. Then I think 300. If any standard missing, you must inform me. This is related in the planning. So planning, you should know planning and audit of finance statement, right? Benefit of adequate audit planning. Benefit of adequate audit planning, we discussed. Benefit of adequate audit planning. Last time, tested list 4 objective of audit planning, right? List 4 objective of audit planning. Here, the standard, the standard, the role and timing of planning under that, the following that adequate planning benefit the audit of finance statement in several ways. Benefit of audit planning. Two main activities of audit planning, that is planning activities and overall develop an audit plan. Overall audit strategy. In overall audit strategy, establishing an overall audit strategy, what should we consider? Planning activities planning activities, the auditor shall establish overall audit strategy, set scope, timing, and direction of audit. Overall audit strategy. Overall audit strategy sets time, scope, and direction of audit. Audit and guide. There are established an overall audit strategy. Several 5 matters auditor consider. So you must know when overall audit strategy developing matters to be considered, right? So you should we study the matters to be considered when the overall audit strategy, right? Then the documentation include 2 matters: overall audit strategy and audit plan. The documentation include overall audit strategy and audit plan. Documentation. Based on that, we discussed the audit program. In the documentation, I missed the documentation. We discussed. I remember that there are 2 files: permanent audit file and current audit file. We have discussed the contents of the permanent audit file, contents of the current audit file. Also, we discussed in the SLAUS 230. Sorry, yes, I forgot to tell that in the working papers or documentation, whatever the areas we discussed, there are 2 files: permanent audit file and current audit file. You should know what is permanent audit file and what is current audit file. What are the contents of the permanent audit file? What are the contents of the current audit file? We have that is not in the standard. I have explained separately. Likewise, here audit plan, audit program also I separately explain what is audit program. What are the benefits of audit program? I might give some example for audit program or template or exam. The examples am I given for the audit program templates or examples? Students, you should know. You should state yes or no. Audit. I remember I explained audit program. What is audit program? Benefit of the audit program. We discussed in the audit planning. This is separate items, right? To implement the audit plan, auditors develop the audit program, time and scope, everything, audit procedures that is pinpointing the each and every officer's task during the carry out the audit. The audit firms are practice this audit program. There are benefits and advantages or disadvantages, and how to prepare the audit program also we discussed, right? SLAUS 300. Other one is SLAUS 315. Have we discussed risk assessment? 315. Yes or no? Friends, 315. Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Internal control risk assessment. Have we discussed internal control and components of the internal control? Yes. Yes or no? Students, you should answer. Three 115. Under that, I remember that internal control, component of the internal control. Are we discussed 315? You must honestly tell me, are we discussed 315 relating to the identification and assessing the risk of material misstatement through understanding the entity and its environment? Under this standard, have we studied the internal control and component of the internal control? Have we studied? If you are silent, I will take 315 SLAUS 315 under the internal control component of internal control system. Then we have studied 500. Relating to audit evidence, right? Last time 315. What are the three main audit procedures to be performed as required by and explained in SLAUS 315 to draw reasonable conclusion on which to base the auditor's opinion? 315 last time tested. Internal control and component of the internal control. You should note down. Then audit evidence. Under the audit evidence, you should know what is audit evidence, what is appropriateness, sufficiency. SLAUS 500. SLAUS 500. Audit evidence. Under this, you should know what is audit evidence, what is the sufficiency and appropriateness. You should know what is audit evidence, sufficiency and appropriateness. The definition of accounting records, definition of audit evidence, definition of sufficiency and appropriateness, then deficiency of accounting records. To obtain audit evidence, there are two audit procedures of obtaining the audit evidence. There are two audit procedures. One is risk assessment procedures. Other one is further audit procedures. Further audit procedures, test of compliance and substantive test. We should know what is substantive procedures, right? To test of compliance, substantive audit procedures, but you should know what is substantive audit procedures, that is detailed test of transaction and balances, and analytical procedure, right? That is called substantive audit procedures, and we discuss the methods under the audit procedures described. Under the substantive audit procedures, method to obtain audit evidence, inspection, inquiries, observation, confirmation, computation, and analytical review, and reperformance. All are methods of obtaining evidence: confirmation, computation, analytical review, computations, reperformance, everything methods to obtain evidence, external confirmation, recalculation, reperformance, and analytical procedure inquiries. Right? Those are the methods. Last time, These 4 audit procedures used by the auditor to obtain audit evidence as mentioned in SLA US 400. State 3, generalization about reliability of the evidence. So there are 5 generalization we discussed. Reliability of the evidence. Internal evidence is more reliable than the external evidence. Original is reliable than the copies, like that. 5 generalization we discussed last time tested, right? So reliability of the evidence also we discussed. And relevance and reliability. We should know, and the audit evidence, what is relevance and reliability. Reliability last time tested, we should know what is relevance. So we should know what is audit evidence, what is sufficiency and appropriateness, and sufficiency, appropriateness, analytical to test. This one, another term. Accounting records. Accounting records. Then you must know that test of control and substantive procedures. You should know what is substantive procedures, what is relevance and reliability of the evidence, and what are the methods available to obtain audit evidence. Also, we discussed inspection, inquiries, observation, confirmation, computation, re-performance, and recalculations. So, right, 600. Then 620, analytical procedures. I think we discussed, not lengthy, we discussed briefly what is, are we discussed analytical review 520? Students, you should answer, otherwise this area also will be tested. I know that I shown that profitability ratios and methods of analytical review. Yes, if you are silent, I take this. Definition of analytical procedure. Then what is analytical procedure you should know. Then type of analytical procedure also I explained different type of analytical procedures. Analysis of financial statement, right? Then we discussed the 610, isn't it? 610 relating to the concerning the work of internal audit. Concerning the work of internal audit. 610. Concerning the work of internal auditing. This is not a difficult one. In this standard, we studied what is internal auditing. What are the definition of internal auditing? What are the differences between internal audit and external audit? What are the scope of internal audit or duties of the internal auditor as per the standard? Objective of the internal auditor. Objective, duties, scope, all are same. Right? Then the assessment of the internal audit work by the external auditor. What are the matters taken into consideration when the external auditor assessing the work of the internal auditor for specific work, assessment of the specific work. all we discussed in the standard 610. Yes, relationship between the internal audit functions and external audit functions. Definition of internal audit function and internal auditors. Using specific work of the internal auditors, then we have given the objective of internal audit function. There are 6 functions: monitoring of internal control, examination of financial and operating information, review of operating activities, review of compliance with laws, rules, regulations, and risk assessment. These are the risk assessments and governance. Governance, check current owner, risk assessment, assess current owner risk. Then review the compliance with laws, rules, regulation, review current owner, operating system. That is, review the economy, efficiency, effectiveness, check current owner, and financial, review the financial and operating information. Okuma check current owner, and the main first one is monitoring internal control system. That is the main objective of internal audit. Right? These are the 5 objectives is given in the standard. You must not only this exam, every exam you must knows about this, right? So you should thoroughly understand what is internal audit, what is external audit, what are the functions of the internal auditors, what are the distinction between external auditor and internal auditor, what are the scope of internal auditor, what are the criteria applicable for assessment of the work carried, specific work carried out by the internal audit. So those are the matters we discussed. Right. 610. Other one is 700. Forming an opinion of the financial statement. 700. I think you can see this. SLAU 700. Forming an opinion and reporting on financial statement. Reporting on financial statement. Under this standard, we studied general purpose financial statement, fair presentation framework. That is not important for you. Forming an opinion. So this is a specific area we discussed, and particularly when evaluating whether in view of requirements of the applicable financial reporting framework, right? So applicable financial reporting framework sambandha. These things you must check. Applicable financial reporting framework. According to the standard, you must check financial statement adequately disclose the significant accounting policies selected and applied. Accounting policies selected and applied are consistent with the applicable financial reporting framework and appropriate. Accounting estimates are made by management are reasonable. Information presented in the financial statement is relevant, reliable, and comparable and understandable. Financial statement provides adequate disclosures. The terminology used in the financial statement, including the title of the financial statement, is appropriate. So that in particular, the auditor shall evaluate whether, in view of requirements of applicable financial statement, applicable financial reporting framework. So when you evaluate these things, you must, these 5 or 6 matters, you must consider when you evaluate the auditor, the view of requirements of applicable financial reporting framework, right? When you decide as an auditor, when you decide whether or the client is comply with applicable financial reporting framework, you should consider these points, right? That is given in the standard paragraph 13. This auditor's report, right? Auditor's report in writing, these elements, title, address, index, paragraph, management responsibility for financial statement, auditor's responsibilities, auditor's opinion, other reporting responsibilities, signature of the auditor, date of the audit report, auditor's address. All these are elements of contents of main elements of audit report: title, addressee, indirectly paragraph, description of the management responsibilities, auditor's responsibilities. In this standard, auditor's signature, auditor's date of the audit report, address. In this last time, this question is straight away asked. State basic elements of audit report as mentioned SLAUS 700. So in these elements, you should know the if you ask what is title, what is auditor's responsibility. So what is description of the auditor's responsibility, right? Description of the management responsibility. Management responsibility means preparation and presentation of the financial statements are management responsibility, right? Then auditor's responsibility, what should be given in the paragraph under the elements of each elements of the audit report explained what is management responsibility. That is explanation of the paragraph A20, management responsibility of the financial statement. Auditor's responsibility, the A24 to 26. Auditor's responsibility and management responsibility, how they given in the auditor's report, right? That is then in this standard we studied the unmodified opinion, right? Unmodified opinion, right? So you should thoroughly know how to prepare. Some other exams, something mistake in the elements, audit elements, some mistakes you are asked to correct these mistakes, right? That type of questions not asked, but you should know in this standard. You should know when you evaluate the applicable financial reporting framework, what are the matters taken into consideration, and you should know that elements of audit reports, the list elements, and we must thoroughly know each and every element. If it is title, you should what you understand title. If it is auditor's responsibilities, what is this? How to given management responsibilities. So you can refer the standard or you can refer the published audit report. How the published audit reports the company, you can see management reports mono auditors report mono points from even paragraph not expected, you can expect in the points form, right? So this one, and then 705 modified report. What is modification? What are the circumstances arise for the modifications? So what is qualified opinion? adverse opinion and disclaimer opinion. What are the conditions to be satisfied? What are the conditions should be followed to express this opinion? And you must sometimes you must ask the examples for the basis for qualifications. So basis for the qualification we discussed. What are the basis for the qualified opinion? What are the basis for the adverse opinion? What are the basis for the few examples? Disclaimer opinion. That is, a disclaimer opinion means scope limitation. Scope limitation arises three situations. So beyond the control of the entity, sometimes entity refuse to give sufficient appropriate audit evidence. Sometimes maybe systems. So that is a scope limitation. You may, in the scope limitation, material and purposive situation, you can disclaim. You can say that opinion, unable to express an opinion on the financial statement. That is called disclaim opinion. Adverse opinion means the financial statement does not show true and fair view. That the misstatement is very serious, material and purposive. So that you can obtain a sufficient appropriate audit evidence, but you are concluding these are material and purposive nature, right? That the misstatement is very serious. So, for example, the subsidiaries company, during the year you acquired the subsidiary company, those assets and liabilities details are not given in the consolidated financial statement. So, material and purposive, that is an adverse opinion. Adverse opinion means financial statement does not show true and fair view. So, these paragraphs are there, examples, right? That what is basis for qualification? Well, that's a few examples for basis for qualification you should know. Basis for adverse opinion, disclaimer opinion, and you should know what is about this opinion, right? And what we studied, what another one part we studied. Can you say what are the missing part, omitted part? Students, right? I asked from you several times whether SLAUS 315 we discussed or not. One students chat with me, SLAUS 315, we didn't study, sir. Are you agree or not agree? We are not, I am not explained this one, but internal control, I remember that internal control and components of the internal control discussed, you must agree or not? Yes, if you agree, we can omit this, we can eliminate the standard, right? Even internal control section, we can eliminate for the examination, right? Then, other chat is, I will tell you right after finishing this. This apart from this standard, right? SLA is 200, 220, 210, 230, 300, 240, 500, 520, 610, 700, 705. Apart from that, we have discussed some area. I think audit of limited liability companies. I remember that. I agree or not agree? Audit provisions in the Companies Act number 7 of 2007. Have we studied? If you are silent, I can't do anything. Audit of limited liability companies. Under that, we discussed certain important audit provisions relating to appointments of the auditors, removal of the auditors, filling the casual vacancies, qualifications of the auditors, disqualifications of the auditors, rights of the auditors, duties of the auditors, auditors' remuneration, conflict of interest, auditors' report on the limited liability companies, and certain other things, important things we discussed. Last time in the paper, they discussed the provision of the Companies Act 7 of 2007 regarding the following: qualifications and disqualification to be an auditor, replacement of an auditor. In order to comply with the statutory requirement of the section of the Companies Act 7 of 2007, what are the 5 matters should be included in the audit report on the financial statement of the limited liability companies? So we studied this Company Act provision under this section last time. Tested qualification and disqualification, remuneration of the auditors, appointment of the auditors, removal of the auditors, the partners. If you want the partners of the audit, what are the requirements? Information accessibility, all we discussed. Right. ISA 200 also we studied. ISA International Standard on Auditing 200 almost same in the SLA US 200 and ISA. That provision also we that standard also we discussed certain parts. So these are the areas we discussed, right? Apart from this, any comments from you, students? Are we missing anything other than this area? Students, other than this area, have we discussed any other thing, any other areas?
No, sir.
Yes, thank you very much. I already planned to do some other part also, expenditure audit and asset verification, that balance sheet verification of assets and liabilities, those things we were omitted that. These are the areas. If you study these areas thoroughly, it won't be any problem. Only tested these basic matters and whatever I pointed out here. That one students ask what are the main areas do we need to study for exam. Please study all area. Small questions are there, right? So far the exam paper is not tested, not ready, right? Exam paper is not so far not ready. Anyhow, whatever I indicated here, based on last time, other than the tested area, you must give more weight. Sometime small area, last time tested area, sometimes repeated in another way. But other than this, for example, reasonable assurance and limited assurance differentiate. It won't be not possible repeating again. Then main purpose of audit engagement letter. So even though not repeated, generally you should know the benefit of the audit engagement letter, right? So this that interaction assurance part, whatever not tested, you think about. Then SLAS 200, what we discussed here, you must. It is other thing. It is not possible to test at all area. Only 5 questions. No, all area not these things. You must give more weight to audit evidence, right? The internal audit. These are the not the difficult area. No, internal audit evidence, internal audit reporting. Today's session, I think you can remember next week. There's the audit opinion and all example of opinion. You refer certain the standard. If you refer the standard today's standard, definitely this will test it at the audit opinion, right? So you can manage and this evidence assurance, internal audit. Engagement letter, documentation. Documentation, you must see the examples of audit documentation or working papers. You must familiar with this. Fraud and error, audit planning, audit program. So these are the area you try to check, right? So it won't be any problem. Those some of the students I know very big because they are concentrating other involvement and other problems, domestic problems or some other problem. They are failed to attend this class. Sometimes never see these notes also. No problem. If you take effort this remaining 1 week, definitely you can get through. You sit for the 35 MCQ exams, right? And the assignment marks also taken for the 35 marks. So balance marks you must get it from this paper, right? These are the messages. Then one student asked, yes, main areas we need to study. The other one area, other students ask notes. I think I don't know whether is it possible to upload LMS. I will discuss with the coordinator some notes. They especially given the slides other than the standard. Standard, it is not possible to upload this time. Right? I already several times inform you to get the standard from net and study. So standard, it is not possible. Other than the standard, I have discussed some slides. Right? If possible, I will discuss with the coordinator and take action to upload this remaining additional notes, the fraud and the 2 or 3 notes. I will check up and I do whatever possible. Any other message? Anything? If you want to clarify, you can clarify. මොනහරි අඩපාට මොනහරි ප්‍රොබ්ලම් නම් කතා කරන්න පුළුවන්. ஏதாலும் பிரச்சனைகள் இருக்குமென்னு சொன்னால் உங்களுக்கு எக்ஸாம் செட் பண்றது விளங்காம இருக்குமென்னு சொன்னால் விளங்காத ஏரியான்னு சொன்னால் நீங்கள் கேளுங்க. That intention, my intention is to get through all students as much as possible. Last time also there are a lot of repeat students. That you should, one thing I will tell you that any question not tested outside from the lessons what we discuss here, right? So what we discussed, if you are clearly and very understandably short notes or any other notes, you can manage to get through the exam. If you are, some students can get very excellent they written, so no problem. The students ask what time is the exam tomorrow. I will ask from this. I think the coordinator will discuss with students rep and decide anyhow. என்னடா ஒரு விஷயம் என்னன்னா, நாளைக்கு எத்தனை மணிக்கு எக்ஸாம் கேட்குறாங்க. அது என்ன டைம் நீங்க ஃபிக்ஸ் பண்ண போறீங்க? நீங்க ஒரு ஸ்டூடெண்ட் ட்ரிப்போட காய்ச்சிட்டு ஃபிக்ஸ் பண்ணுங்கன்னு சொன்னேன். அப்படித்தான் சொன்னேன். நான் ஒரு 1 hour 35 உங்களுக்கு அனுப்பிட்டேன் நான் இந்த மார்னிங். ஓ ஓ ஓ ரைட் 35 1 hour 1 hour. ஓ ரைட் ஆமா ஆமா ஆமா. அது இருக்கா 9:30 மார்னிங் வைக்கிறதான் பெட்டர். ஏன்னா கொஞ்சம் ஃப்ரெஷ்ஷாக செய்வாங்கல்ல. அப்ப மார்னிங் 12க்கு முன்னுக்கு பார்த்துக்காங்க. 1 hour தானே? சரிதானே? ஓகே ஓகே ரைட் ரைட் தேங்க்ஸ். Students, she will communicate with your student rep most probably before 12 o'clock. 1 hour exam, MCQ 1 hour exam. Immediately you can get your results. I think shall we wind up? Certain things are beyond my control, that you also not cooperate with me to have a lectures on Sunday, and that due to the sports festival, I am unable to take the lectures last 2-3 classes. Anyhow, I am very satisfied. Almost important areas are covered, right? That of course that is a responsibility. Conducting exam is responsibility with the coordinator. I can't decide that. Depending on coordinator, if everyone having every agenda, own agenda, if it's difficult to satisfy everyone, right? Anyhow, this matter I pass to coordinator and student rep. You can sort it out, this matter, right? I can't decide this. Some students ask 10 o'clock, after 12 o'clock. Some are asking church problem. Those problems are there. Anyhow, only one day, no, you should try to manage. Even you must, if it is important, you can't prayers, you can't postpone. That is depend on you, right? Is it okay? Any comments, students? You can speak. If you don't have any other things to discuss, we can wind up. I am very sorry. The online classes not so impact. That if classes arranged directly, it is more benefit and more useful. It's very unfortunate situation. That is why that some of the students' performance is very poor. They are because we don't know whether they are followed lectures or on the computer and doing some other work. this is not so effect. There's a management and department also knows not only this subject, most of the other subject also problem. Conducting lectures online continuously. Please tell this paper like previous paper. Yes. This paper model is like previous one. Don't worry about this paper. You study this. Use this message, right? Whatever I explained here, whatever given more weight here, you can study without any fear. Don't afraid. Sometime you are never ever open your this audit notes or anything up to now, right? You try to give effort this remaining 1 week. Definitely you will get through the exam. Don't worry. So students, shall we wind up? So thank you very much for your cooperation. Wish you all the best. Thank you very much.
Thank you, sir.
Okay.
Thank you, sir.
Thank
Okay.
you, sir.
Welcome.
Thank you, sir.
Okay.